ਜੀ ਵਾਹਿਗੁਰੂ ਜੀ ਕਾ ਖਾਲਸਾ ਵਾਹਿਗੁਰੂ ਜੀ ਕੀ ਫਤਿਹ ਭੈਣ ਜੀ।
ਵਾਹਿਗੁਰੂ ਜੀ ਕਾ ਖਾਲਸਾ ਵਾਹਿਗੁਰੂ ਜੀ ਕੀ ਫਤਿਹ ਵੀਰ ਜੀ।
ਜੀ
ਹਾਂਜੀ
ਅੱਛਾ ਯਾਰ
ਸਰ।
ਆ ਕੇ
ਮੈਂ ਆ ਤਾਂ ਗਈ, ਮੈਨੂੰ ਅੱਜ ਯਾਦ ਤਾਂ ਹਰ ਵਾਰ ਹੁੰਦਾ ਵੀਰ ਜੀ, ਪਰ ਮੈਂ ਹੋਮਵਰਕ ਨਹੀਂ ਕੋਈ ਕੀਤਾ ਹੋਇਆ ਤੇ ਉਹ ਮੇਰਾ ਤਾਂ ਰਹਿ ਜਾਂਦਾ ਹੈ।
ਅੱਛਾ ਅੱਛਾ ਜੀ
ਤੇ ਮੈਂ ਨਹੀਂ ਨਹੀਂ ਹੋਮਵਰਕ ਮਤਲਬ ਕਿ ਮੈਂ ਉਹ ਜਿਵੇਂ ਅਕਾਊਂਟ ਫਿਡੈਲਿਟੀ ਤੇ ਜਾਂ ਕੁਛ ਤੇ ਉਹ ਰਹਿੰਦਾ ਵੀ ਮੈਂ ਕਰ ਲਾ ਪਹਿਲਾਂ, ਫੇਰ ਮੈਂ ਕੁਝ ਤਾਂ ਹੀ ਸਮਝ ਆਏਗਾ, ਬਿਨਾਂ ਨਹੀਂ ਤਾਂ ਦੇਖ ਦੇਖ ਕੇ ਨਹੀਂ ਕਈ ਵਾਰ ਪਤਾ ਲੱਗ ਰਿਹਾ। ਤੇ
ਹਾਂਜੀ ਹਾਂਜੀ ਬਿਲਕੁਲ।
ਤੇ ਉਹ ਮੈਂ ਕੋਈ ਨਹੀਂ, ਮੈਂ ਹੁਣੇ ਨਾਲ ਨਾਲ ਉਹਨੂੰ ਕਰਦੀ ਆ।
ਹਾਂਜੀ ਤੁਹਾਡੇ ਕੋਲ ਅਕਾਊਂਟ ਹੈਗਾ ਟ੍ਰੇਡਿੰਗ ਵਾਸਤੇ?
ਵੀਰ ਜੀ ਪ੍ਰੀਤ ਕੋ ਹੈਗਾ ਤੇ ਉਹ ਕਹਿ ਰਹੇ ਸੀ ਵੀ ਮੈਂ ਉਹੀ ਯੂਜ਼ ਕਰ ਲੈਂਦੀ ਆ, ਉਹਨਾਂ ਕੋ ਚਾਰਲਸ ਸ਼ੌਪ ਦਾ ਹੈ। ਤੇ ਮੈਂ ਲੱਗੀ ਸੀ ਕਿ ਫਿਡੈਲਿਟੀ ਦਾ ਦੇਖਣ ਕੇ ਵੀ ਉਹ ਉਹਦਾ ਖੋਲਣਾ ਮੈਂ।
ਓਕੇ
ਤੁਸੀਂ
ਠੀਕ ਹੈ।
ਮੈਨੂੰ ਸ਼ਾਇਦ ਇੱਕ ਵਾਰ ਉਹਦਾ
ਪ੍ਰੀਤ ਕੌਣ ਹੈਗੇ ਹੈ?
ਪ੍ਰੀਤ ਮੈਂ ਹਸਬੈਂਡ ਵੀਰ ਜੀ।
ਉਹ ਅੱਛਾ ਅੱਛਾ ਓਕੇ ਓਕੇ ਠੀਕ ਹੈ, ਕਿਉਂਕਿ
ਹਾਂਜੀ
ਇੱਥੇ ਇੱਕ
ਹਾਂਜੀ।
ਉਹ ਵੀ ਆਉਂਦੇ ਆ, ਇੱਕ ਹੋਰ ਭੈਣ ਜੀ ਆਉਂਦੇ, ਉਹਨਾਂ ਦਾ ਨਾਮ ਵੀ ਪ੍ਰੀਤ ਹੈਗਾ।
ਉਹ ਅੱਛਾ ਅੱਛਾ, ਨਹੀਂ ਨਹੀਂ ਇਹਨਾਂ ਕੋ ਹੈਗਾ ਚਾਰਲਸ ਸ਼ੌਪ ਦਾ। ਤੇ
ਹਾਂਜੀ ਤੁਸੀਂ ਹਾਂ ਤੁਸੀਂ ਉਹ ਵਰਤ ਲਓ ਯਾਰ।
ਹਾਂਜੀ ਮੈਂ ਉਹੀ ਦੇਖਦੀ ਹਾਂ, ਉਹਦੇ ਨਹੀਂ ਤਾਂ ਕ੍ਰੀਡੈਂਸ਼ੀਅਲਸ ਲੈ ਕੇ ਨਾ ਫਿਰ ਉਹ ਖੋਲ ਲੈਂਦੀ ਹਾਂ।
ਹਾਂਜੀ ਹਾਂਜੀ। ਚਾਰਟ ਸ਼ੌਪ ਦੇ ਵਿੱਚ ਵੀ ਇੱਕ ਆਪਣਾ ਸੌਫਟਵੇਅਰ ਵੀ ਆਉਂਦਾ ਥਿੰਕੋ ਸਵਿਮ, ਆਪਾਂ ਉਹ ਵੀ ਦੇਖ ਸਕਦੇ ਹਾਂ।
ਉਹ ਸ਼ਾਇਦ ਮੈਂ ਪਿਛਲੀ ਕਲਾਸ ਜਦ ਤੁਸੀਂ ਕਰਾ ਰਹੇ ਸੀ ਨਾ, ਉਦੋਂ ਮੈਂ ਦੇਖਿਆ ਸੀ। ਮੈਂ ਕੈਂਡਲਸ ਵਾਲੀ ਕਲਾਸ ਵੀ ਦੇਖੀ ਸੀ, ਉਸ ਤੋਂ ਬਾਅਦ ਐਕਚੁਅਲੀ ਜਦ ਤੱਕ ਤੁਸੀਂ ਆਪ ਮਤਲਬ ਐਕਸਪਲੋਰ ਨਾ ਕਰੋ, ਫਿਰ ਮੈਨੂੰ ਲੱਗਦਾ ਤਾਂ ਫਿਰ
ਹਾਂਜੀ
ਪਤਾ
ਹਾਂਜੀ
ਨਹੀਂ ਲੱਗਦਾ ਹੈ ਨਾ। ਤੇ
ਹਾਂਜੀ ਉਹ ਆਪ, ਹਾਂਜੀ ਆਪ ਥੋੜਾ ਜਿਹਾ ਕਰਨਾ ਪਏਗਾ।
ਹਾਂਜੀ ਹਾਂਜੀ, ਨਹੀਂ ਕਰਦੀ ਹਾਂ ਵੀਰ ਜੀ, ਕਰਦੀ ਹਾਂ।
ਹਾਂਜੀ ਹਾਂਜੀ ਚਲੋ, ਥੋੜਾ ਜਿਹਾ ਅੱਜ ਤੁਸੀਂ ਮੈਨੂੰ ਦੱਸੋ ਤੁਸੀਂ ਕਿੱਥੇ ਆਪਣਾ ਰੁਕੇ ਹੋਏ ਹੋ, ਤੇ ਆਪਾਂ ਉੱਥੋਂ ਦੀ ਫਿਰ ਸ਼ੁਰੂ ਕੰਟੀਨਿਊ ਕਰ ਲੈਂਦੇ ਹਾਂ।
ਤੁਸੀਂ ਕਰ ਲਓ ਵੀਰ ਜੀ, ਜਿੱਥੇ ਵੀ ਕਲਾਸ 'ਚ ਹੋਰ ਪਤਾ ਨਹੀਂ ਕਿੱਥੇ ਹੈਗੇ, ਤੇ ਮੈਂ ਨਾਲ ਨਾਲ ਉਹਨੂੰ ਲੌਗਇਨ ਕਰਦੀ ਹਾਂ ਤੇ ਫਿਰ ਦੇਖ ਲੈਂਦੀ ਹਾਂ ਉਹਦੇ ਵਿੱਚ ਜਿਵੇਂ ਤੁਸੀਂ ਕੀ ਕਰਾਉਣਾ ਅੱਜ।
ਅਹ ਵੈਸੇ ਜਿਹੜਾ ਆਪਣਾ ਯੂਜਲੀ ਮਤਲਬ ਲੋਕੀ ਮੈਨੂੰ ਦੱਸਦੇ ਆ ਕਿ ਵੀ ਤੁਸੀਂ ਆਪਣਾ ਜਿਹੜੇ ਆਉਂਦੇ ਆ ਜੁਆਇਨ ਕਰਨ ਵਾਸਤੇ ਵੀ ਉਹ ਕਿੱਥੇ ਇਸ ਤੱਕ ਹੈਗੇ ਆ, ਤੇ ਫਿਰ ਮੈਂ ਉੱਥੋਂ ਦੀ ਸ਼ੁਰੂ ਕਰ ਦਿੰਦਾ, ਕਿਉਂਕਿ ਮੈਂ ਜ਼ਿਆਦਾ ਅੱਗੇ ਨਹੀਂ ਮੈਂ ਵਧਣਾ ਚਾਹੁੰਦਾ। ਮੈਂ ਕੋਸ਼ਿਸ਼ ਮੇਰੀ ਇਹੀ ਹੈ ਕਿ ਵੀ ਜਿਹੜੇ ਵੀ ਆਪਣਾ ਸਾਰੇ ਆ ਰਹੇ ਆ ਜੁਆਇਨ ਕਰਨ, ਬਈ
ਹਾਂਜੀ
ਉਹ ਸਾਰੇ ਆਪਣਾ ਜਿਹੜਾ ਚੀਜ਼ ਮੈਂ ਹਜੇ ਤੱਕ ਸ਼ੇਅਰ ਕੀਤੀ ਹੈ ਉਹ ਸਾਰਾ ਸਮਝ ਜਾਣ। ਤੇ ਅਗਰ ਉਹ ਤੁਹਾਨੂੰ ਹਜੇ ਸਮਝ ਨਹੀਂ ਆਈ ਹੈ ਤੇ ਅਸੀਂ ਉਹੀ ਜਿਹੜਾ ਦੁਬਾਰਾ ਤੋਂ ਰਿਵਿਊ ਕਰ ਲੈਂਦੇ ਹਾਂ।
ਠੀਕ ਹੈ ਵੀਰ ਜੀ, ਮੈਂ ਹੁਣੇ ਲੌਗਇਨ ਕਰਦੀ ਹਾਂ। ਜਦ ਤੱਕ ਤੁਸੀਂ ਜੇ ਭੈਣ ਜੀ ਹੋਰ ਇੱਕ ਆਇਆ, ਉਹਨਾਂ ਨੇ ਜੇ ਉੱਥੇ ਤੁਸੀਂ ਕਰਨਾ, ਤੇ ਮੈਂ ਜਦ ਤੱਕ ਹਜੇ ਇਹਦੇ ਤੇ ਲਗਾ ਕੇ ਦੇਖਦੀ ਹਾਂ ਕਿ ਇੱਥੇ ਅਟਕਦੀ ਹੈ।
ਹਾਂਜੀ ਠੀਕ ਹੈ ਜੀ।
ਠੀਕ ਹੈ ਜੀ।
Hi Madhu.
Hello, Jaswinder bhai. How are you?
Good, how are you?
I'm doing good.
So you're not a beginner, right?
I mean, I've been trading a while, but like I said in one of the conversations, so I didn't do well. So I lost most of the money. So I wanted to start again. That's where, yeah, I wanted to see, okay, where am I missing? That's why I'm in the beginners group.
Okay, okay. All right, okay. So how's your chart reading skills? Are you able to do technical analysis?
To some extent, yeah, I'm able to use EMAs, and then candle readings inside bars, outside bars. Um, I'm trying to learn more of it actually.
Okay, all right. So, did you join my last class where I talked about Stosh?
Yes, I did. I did.
Okay. So yeah, most likely we'll continue on that. So that Stosh indicator is actually very helps. It helps a lot. Uh, so let's pull up NVIDIA here. All right. And this is what we actually had looked at, this chart, NVIDIA's chart. So I had said the Stosh hit below 20, and we were looking for a candle closing above the high of a previous day high. So this
Right.
candle, this candle actually went above the high. But here's the problem though. When it leaves a gap,
Right.
leaves a gap, normally it will come back to fill the gaps.
Right. Right.
So yeah, but I mean, it doesn't hurt that if you're purchasing shares, you could have done that this day. So after looking at this, you could have actually purchased some shares here, okay? Because now the resistance is sits right about here,
Right.
okay? So what we could do is have some shares purchased here. If it does come down, then we can add to our position. But target really this resistance here, 183.96,
Okay.
184. So normally when it does then hit our target, we could reduce some of the sizing. So let's say we open some shares here, it comes down, we add some more shares. So we add here, and then if it comes down here somewhere, let's say it fills the gap, we will add some shares here. Then you could do it like this trend here. When we do hit the target, this resistance at 184, you can reduce the size, and then you can just leave some shares so that those are the runners, and then you will just manage those by placing a stop loss. So let's say then if it does go above here, let's say it comes here. Let's say it comes down somewhere here to let's say if it retests this, goes here, then you can place a stop loss right about the low down here.
Okay.
So this will be your stop loss. And then you will continue moving that stop loss. So let's say comes down here, makes this move something like this, right? Then you can continue moving this stop loss to the low of this here. We'll move here, and you'll move here. So this way it works very nicely.
Right.
There are some brokers where you can have a trailing stop losses. So then you don't have to move, you don't have to keep on changing the stop loss. You just place it
Right.
one time and then it will just trail on its own. So let's say your initial stop loss will be here, and then it will just trail. It will keep on trailing and keep on moving as the price going up.
Right.
So let's see.
Made a doji last Friday.
Yeah, yeah, Doji really doesn't tells us anything. So the next day
Right.
will tell us more. So tomorrow
Right.
will
Right.
tell us.
Yeah. That's what I mean. Yeah.
Yeah. And plus, looking at yeah, I mean, if you look at the weekly chart, I mean, that's a nice sort of bullish engulfing here.
Yeah.
This is a nice bullish engulfing. Yeah. So normally what happens is when we get this bullish engulfing, it can come to retest this. So normally the price will come. So let's say if this is the right there. So it can come to this zone. It can come to retest this.
Mm-hmm.
You come here something like this and then bounce. You can do like that.
Right.
Okay. I'm gonna jump on my whiteboard. Let's see what we have covered so far in here, and if there's something else. Okay. So this is what we have covered actually so far. We have covered support and resistance, market structure. In market structure, we have covered the swing change of character and swing breakout structure, local change of character and local breakout structure, breakouts, breakdowns. We also covered fibs, and we looked at stosh zones. We covered a little bit of it. Okay, we can look at some more of those. Zones can be support zones, resistance zones. Support zones can also become demand zones, and the resistance zones can also be labeled as supply zones. Do we all understand all of these pieces, or do you want me to cover anything in here?
PG, could you please cover?
I'm gonna find my pen again. यूज करदा लिखने वास्ते. One that goes in the Okay, so let's go over support and resistance again, and then we'll just try to cover or review each one of this, and then we'll also this time what I will do is we'll take some examples so that it makes more sense. So let's go back to the chart. So we'll try to combine few things. Okay, so resistance. So what is resistance? So resistance is where the price fails to go higher. Okay, so we can see here. Okay, so price comes up and then it goes down. Price comes up here, goes down, comes up, goes down, comes up, goes down. So we can see there's a clear resistance here. Okay, so if I was to draw a line, I will draw a line that touches all of this VIX. Okay, now what is VIX? So these are called candles. Okay, ਭੈਣ ਜੀ ਤੁਹਾਨੂੰ ਪਤਾ ਨਾ ਆਪਣਾ ਇਹ candles ਤੇ VIX.
ਹਾਂਜੀ ਇਹ ਵਾਲਾ ਅਟੈਂਡ ਕੀਤਾ ਸੀ ਵੀਰ ਜੀ
Okay, ਠੀਕ ਹੈ. So these are candles. Candles are made up of wicks and body. Okay. I'll quickly cover each piece of it. So I'll just cover. Okay. So the top part of the wick is called the high price. So when we say what was the high price of this candle, that'll be top of the wick. So this is where the high price was. Okay, and when we say what's the lowest price for this, so this is a weekly candles now, because I'm in a weekly chart. So if I want to know what's the lowest price for this week, there'll be the bottom of the wick. Okay. The high price and the low price is the same for the green and the red candle. The only difference is the closing and the opening. Okay. Green candle means the price went up. Okay. It opened below, but the price had gone up, so the closing was above the open. So in the green candle, the top of the body is the closing price, where it closed this week. This week it closed here, the top of the body. Where was it opened? The bottom of the body. That was the open. It opened. That was the opening price right about here. Okay. In the red candle, because the red candle tells us the price went down, so the open was above, and by the time it closes at the end of the week, it was below the opening price. So in the red candle, the closing price is always below the opening. So the opening was at the top of the body. Okay. Okay. The low price and the high price is same in both the candles. The only difference is in the closing and the opening. Green candle says the price went up, so closing will be higher than the opening. Red candle says the price went down, so the closing will be below the open price. Okay. All right. Okay. So we were talking about resistance. So where is the resistance? Where the price. So this is the resistance here, where the price fails to keep going higher. Okay. Now you can see that I drew a resistance level at 183.29. Okay. But what happened is one of the candles stop, it does not touch that. Some of the wicks, they go above. Some of the wicks, they go above that resistance. Okay. So now it's little confusing, right? Do I draw my resistance level right at the top, at the highest price? Do I draw my resistance level touching all the candles and the wicks? Do I draw my resistance level touching all the bodies of the candles? But then it'll be like somewhere down here. Okay, so where do I really draw my resistance level? Here, 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 here. And there are so many choices, right? So this is the reason why I use resistance zone. Okay, so what I would do, I'll take the highest price, highest level, and I will cover everything, all the wicks in there. So I'll start off with the high. Okay, I'll touch this wick, I'll touch that wick, this wick, and I'll also touch this wick right about there. So now this is a resistance zone. I also label that as a supply zone. We shouldn't be confused in the label. You can label it whatever you want. I can simply call it a resistance zone. Okay. So now instead of drawing multiple levels, what I have done, I just drew a box, and I'm calling that a resistance. Okay. Similar to resistance zone, we can also look at the support zones. So let's go back to the time where NVIDIA was dropping. Okay. I'm going to unshare my screen for a second so that you don't see where I'm going. Okay. So I am back in the time. This is still a weekly chart. I'm right here at February. I'm here in February 24th of this year. Okay. So we can see a few things here now. Okay. There was a clear resistance, right? This was the level where it failed to go higher. Okay. So let me draw a zone here. So what I said, I'll go to the highest point, and I'm gonna connect all the wicks below it right about there. Okay. And if I extend it further back, right there. Okay. So I started with the high point at the wick, and then I connected the high point of this wick also, which then also connects with the wicks, the highest wick right about here. Okay. All right. So label it a resistance zone. Okay. All right. So we saw that it failed to go higher, and then we see that it's coming down now, right? So let's see where our support zone is in this case. Okay. So before we answer where is the support zone, what is a support level? A support level is a level where it fails to keep going down. Where price fails to go down. Okay, and we can clearly see here. Okay, goes up, comes down, but at this level, it did not go any further below. There was another support level right about here. Small one, right? Goes up, comes down, but does not go below this. Okay. Is there another support level? Right about here. Goes up, comes down, but then doesn't go below this and keeps going higher. So just saw 3 of them. Okay. Now again, this is one of the levels. I like to go with the support zone, which pretty much gonna connect all of these points.
VG, I have a question.
Hanji.
Why did we consider the green one for August as the support level? Would the support level be only for the red candles?
No, it does not matter the red candle or the green candle. We are looking at the level where the price failed to go below. It can come on the red candle, it can come on the green candle also. So right here we saw there was a red candle, right? I'll delete this. There was a red candle and then a green candle. But we're looking at the low price of the red candle because that was the level where it did not go any below, right? This level here. The low price of this red candle, it did not go, the price didn't go below that. So then when we come here on this green candle, the low price, where it went the lowest, the price went the lowest, that will be the support level. Why? Because this is the level where the price didn't go any more below. Okay. And then same thing here with this red candle. So red candle was when the price is coming down, but what happened is it kept coming down, and this was the lowest price where it didn't go below and it went back up. So that level, that low price, that will become a support level. So it can come in the red candle, it can come in the green candle. But we're looking for a level where the price stopped going more below. That will become a support level. Okay. So support level is where price stopped going any more down, any more below. ठीक है जी, समझ आ गया?
जी, thank you.
Okay. Hanji. Okay. But we just saw, that there are now 3 support levels. So if we are looking to take trade, at which point would you take trade? Would you take it here? 1. Would you take it here at 2? Or would you take it at this at 3? We don't know. Okay, so this is the reason why we then confirm. Okay, we are in a weekly chart right now. Okay, what I'm gonna do here, I'm gonna go into a daily chart. Okay, and here when we were looking at Stoch, we had a confirmation. Preet, do you remember what that confirmation was?
It was it the stock? No,
Yeah.
yeah.
What happens to the candle?
Um,
The candle
I don't know.
needs to close above the
Oh, yeah,
previous day high.
above the, yes, Anji.
So we can apply the same kind of confirmation, okay? We can also actually look at, so I'm gonna actually pull my Stosh indicator here also, okay? So confirmation will be when a daily candle closes above the previous day high, okay? And I'm gonna pull my, so let's go into the daily chart. So we have drawn our 3 support levels. I'm gonna go on my daily chart, okay? I'm also going to pull Stosh here, okay, right there. So you can actually see the Stosh is hitting 20, okay? Stosh is hitting 20. So the now only thing missing is a green candle closing above the previous day high. Now, if that happens on any one of these 3 support levels, that's a golden. Meaning you got your confirmation met at the support level that you drew. Okay, that's the best setup. Okay, so let's see if that happens here. Okay, so right here we see that the candle didn't close above the previous day high. Okay, so we're still gonna wait, and it's still we have our 3 support levels down here. Okay, so let's see if it comes to hit one of these 3 supports level, and it gives us a candle closing above the previous day high. We already see that the Stosh is going into the oversold territory right now. Okay, so let's see. Did we get a candle closing above the previous day highs so far? Did we get a candle closing above the previous day high? Anybody got an answer?
No,
No.
not yet.
No.
All right, good, good. Oh,
No, it did.
it did, but it didn't hit our support level. I'm kind of sad. So should we take a trade here?
No, wait for the confirmation.
Or which confirmation are
that-
you waiting?
This-
The resistance are yet by the
Ah,
doji candle right there.
you're adding more confirmation now. I like it. So what he's saying is a candle closing above the high is just not good enough. It needs to hit, it needs to break a recent resistance. Remember, okay. So remember, we have our resistance zone over there. So he's actually adding something else to the confirmation now. He's saying, well, no, this is not good enough. Okay, when a daily candle closing above the previous day high is not good enough. What I want to see is it also needs to break recent resistance level. Okay. So, and he's saying that the recent resistance level is right about here. Right about here. I'm gonna make this red to show that this is a resistance. Okay. So here are the 2 things now. It needs to break the resistance, and the other thing that we were looking for, that it hits one of our support levels, one of our 3 support levels, and then give us a candle closing above the high of previous day high. So it only met so far one condition, that it closed above the previous day high, but it did not hit one of these 3 support levels that we had drawn. Okay. He's saying, okay, let's also wait now for the recent resistance to break. So let's see when that happens. So right now, no trades. Oh, it did. Okay, there you go. So look at this candle now. Actually, my setup was better. So if we had taken a trade here, could have made money. But hey, it's okay. You're never late, okay? I a lot of time hear people saying, "Oh, yeah, I missed it," or and they get sad about that. But here's the thing: stock market every single day will give you opportunities. Okay, so it we shouldn't be sad about missing out, because if you just learn to read charts, you can come up with opportunity every single day. Okay, all right. So now but I am still sad because it did not hit one of my support levels. That's what I'm sad about. Okay, but so it did close above the previous day high, and now it's breaking the resistance. This is what it means by breaking resistance. So this candle here is closing above the resistance. This is called a breakout. A breakout is when a candle closes above resistance. Okay, that is called a breakout. Okay, and we see that the Stosh had hit 20, right? And is closing above the high of previous day high. So, some of our conditions are being met here now. We can take a trade. Okay. So let's take a trade. Let's open okay. I'm gonna open 500 shares here. 501 now. Okay, okay. So I just opened 502 shares. Okay. What I'm gonna do, I'm gonna keep holding these until the Stosh again goes back up to 80. All right, so let's see when that happens. What's going on? Okay. All right. Well, it failed. The trade failed. So it did hit Stosh 80. So what do you think happened here now? What happened here? Okay, let's keep playing this. I kind of have an idea. All right. And remember what I had said, that it needs to hit the one of the three support levels below and then give us this setup. It didn't really happen here. Let's see if it happens here now. Okay. Okay, there you go. So now it's coming into the support levels that I had drawn before. Okay. So now here we need to look for that same setup where it closes above the previous day high. Did that close above the previous day high? It didn't. Okay, so let's keep watching. Did that close above the previous day high?
No.
No, it didn't. It had gone up, but the closing, where's the close of the red candle? The close of the red candle is on the bottom of the body. Where's the high of this green candle? Top of the wick. So the close of the red candle was below the high of the green candle. So this is not closing above the high. So we're still gonna watch. Oh, look at that. That's a massive candle. Okay. So this is the support I was this was the setup I was looking for. What was I looking for? I was looking for a candle closing above the high of the previous day high and that needed to happen at one of these support levels that I had drawn. And look at this. Look, the Stosh went again below 20. So this is the golden setup here. But we had already purchased 502 shares. Right now we are red in that. We're in negative about $4,000. Let's add 500 more shares looking at this. All right. So now we are in total of 1,003 shares. Okay. Now we're gonna hold this until the Stosh gets to 80. Come on, NVIDIA. All right. It took a little while. I thought it would go straight, but what it did, it went back down to retest and then went up. Okay. So yes, what did we really learn in this case now? Okay. The most important thing that we learned here, that always go with a quality stock. Second thing we learned here is your setups can fail. Actually, there are more learnings than that. Okay. So here, let's write them down. Number one, always trade or invest in quality stocks. If you don't know how to find quality stocks, ask in the group. We have some, good traders. I believe Manjeet is here. Or did he leave? I think he left. Okay. All right. Either myself, Manjeet, or other traders, I actually even covered how to find quality stocks on your own. Okay. But always trade, invest in quality stocks. Why? Most likely, they will keep going up. Simple. Okay. That's a simple rule. Okay. Number two, always expect your setup to fail. Therefore, you need patience. Three, risk management. Okay. I'll be talking a whole lot about on risk management. I have already covered risk management, but once I have covered everything in the beginner session, that I will talk a lot about risk management. Okay. So, but still, we are right now in almost about $12,000 gains. Yeah. I mean, we did go down to what? I don't know how much down we went to, $3,000, $4,000. But think of this, we had taken our initial trade was right here, March 14th. That was our initial trade where we had taken like 502 shares. We had added another of about like 502 or 500 shares or so in April. Okay. So this was March, April. Here we are in May. So in about 2 months, okay, 2 months, $12,000. Okay. You cannot make this kind of money putting 8 hours a day in your job for 2 months. I mean, you need to be at a very high position or doing something, in a special work or something. Okay. And, and how many hours did you really put? I mean, so okay, In March we looked at the chart. Oh, it was doing a breakout. Okay, let me open some shares. Okay, and then you don't look at your monitor, your computer for the whole month, next whole month. So how much hours did you really put in? Maybe like 5 minutes putting your trade in. Okay, then you come back. Then you come next month here. You're like, oh, okay, yeah, it's going down. Okay, I'm gonna add, and I see this candle closing above the high. Let me add some more shares here in April. 5 minutes. Okay, and then you go away. Okay, then you come back the next month in May somewhere. You know what? Let me keep going with this. Okay, let's see if we make like $50,000 here, because I think most likely the chances are pretty high. All right, just the next day I made 17,000. Okay, I'm at $24,000 right now. And it hit my resistance zone. I'm at $36,000 right now. $42,000 right now. I don't want to go anymore because I do know that yes, we do hit 50,000 in matter of 3 months, putting only 15-20 minutes of work. So right now we're in July. So in March, April, May, June, July, in 4 months, $42,000. Is that good? So $10,000 each, putting in maybe like 5 minutes in a month. In a month. Not even a day. Well, maybe you could have monitored your positions every day for 5 minutes. Okay, so just gave you a whole example. This happened something in the past, okay? But these patterns, these scenarios can occur in the future. Okay, what I wrote here, this thing is gonna hold in the future also. Okay, always trading, investing in quality stocks. Always expect your setup to fail. Therefore, you need to be patient, but then you also need to learn to manage your risk. Okay, I hope that I encouraged every one of you today, showing this kind of money that yes, need to start trading, right? I mean, I can keep going higher because I know we're gonna hit 50,000 because this is because Nvidia goes even higher. There you go. Just hit $53,000. 60,000. Do we hit 100,000? What month is this? We're almost last month. Yeah, I think it does go even higher, right? It's down slightly. I know. Okay, so no, we didn't hit 100,000 yet. But I mean, if you were holding it, you still keep on holding it, right? Chances are pretty good. And that was the bottom. I mean, that was a really good, my gosh. I wish I could go back in time. What I just showed you. This was a perfect entry. Look at that. And how did we pick that? You still remember how did we pick this? Simply drawing the support levels. Okay. Our initial setup, a trade failed, right? Not this breakout, right? So that failed. What worked really? So I had said before we took the first trade, I had said the price needs to hit this one of the support levels. Okay, two was the confirmation. Candle needs to close above the previous day high. That was it. Just two things. We were also looking at the stars, right? And we saw the stars was touching 20. So that was a bonus. This was a bonus. Okay, and that happened right about here. This right there. And look at this support level here. So this was support level number 2, right? This was a support level this candle gave us that support level where the price failed to go below, right? And then go in the future here, April 7th, the price comes and it does not go below that. I mean, it went slightly, but then it closed above, right? So the same support level from August of last year. This was August of last year. Can you believe that? Price comes to it in April of this year. So from August last year to April of this year. This is exactly what I had said. On my whiteboard, I still have it written. So the reason I don't use indicators, because they're all lagging indicators. They will tell you when something has already happened. But the only thing that can tell you for futures are what? Levels. This is what I had said in the last class. Okay. Levels will stay true even in the future. Okay. So we
Basically,
just
Paji,
uh
basically, you go with the weekly analysis and then go with the daily, right? So first start with the weekly.
right. Yes, you're right. Yeah, you're right. I was looking in the weekly chart. Yes. So I had started in weekly. Okay. There you go. I was somewhere here when I started looking, right? Yeah, I was over here. And then I had drawn these support levels looking at the weekly chart. And then I had gone into the daily chart, okay, for confirmation. And I had said we're gonna go in the daily chart, okay, and then we need to see when the price hits one of these support levels. So these were weekly support levels. And I have said that the higher the time frame, the better levels you're gonna get. But for confirmation, we went to the daily chart and we wanted the price to see coming to the support levels and then meet our confirmation when a candle closing above the high of previous day high.
Thank you.
Yeah. Okay. I'm going to wrap up the beginner session here. So right here, we just looked at few things. We looked at the resistance zone, support levels. And I also kind of told you how do I draw a support zone? So I actually could have combined all these three support levels by drawing this. Okay, and then gone into the daily chart. So when the price entered here, right? It entered. So there were a couple of confirmations you could have used. Okay, my way of confirmation, is when a candle closing above the high of previous day high. You could have simply use a confirmation. Okay, when I get a bullish candle in the support zone. So that was 2 days prior to that, right about here. Okay. So the two conditions will be price entering your support zone, okay, and giving you a bullish candle, and then you would have taken the trade. Stop loss below the low of that candle. That's it, right there. Hanji, it is actually being telecast live on YouTube, so I will send you the link. So this way I don't have to record. Okay, so this will be a stop loss right below the low of that candle that gave you a bullish candle. And you can see that if you had done that, it would have been good. Okay. I did not add a fib in here. Okay. I just want to see. In the fib, does anyone remember what was the levels that I was looking?
58%.
No.
Remember?
My favorite levels are 78.6. 78.6. So you know what? I'm gonna show you a magic here. Okay, I'm gonna draw a fib from this low to the high of that. Okay, and see what happens. And right about there, 78.6. Okay. So all I did is I just took off all the other levels, just left it at 78.6, and you can see where it bounced from. So levels are magical. Fibs gives you levels. This is the reason I don't like to use indicators. I only use levels. Okay, this is exactly what I written on my whiteboard. Okay, so all of my technical analysis is based on levels. Support, resistance, fibs is also levels. Okay, market structure, change of character, breakout structure, they're also part of the same levels. Okay, levels breaking, breakouts, breakdowns, same thing. Levels breaking, resistance is broken, you get a breakout. Support is broken, you get a breakdown. Okay, support and resistance hold very well, even for future. Okay, so I'm gonna wrap up the beginner session here. I'll start for our advanced session. And we'll cover. Start looking at options and maybe futures. So if you want, you can leave here or you can stick around and keep learning. I'll be back in 5 minutes. Okay. So we're gonna get into options. At this point, I expect all of you to be good with technical analysis. Okay. If you're not, you can still learn. Okay. But yeah, the emphasis is, you need to know chart reading. We can look into options where I think I do have do some charts here. Which one is this? Oh yeah, we have started this actually. So there is a book I shared in the group. It lists about 60 different option strategies. Okay. It talks about 21 different strategies. If you're bullish, meaning you're expecting the price to go up. Okay. So if you're expecting the price to go up, you're bullish. There are 21 strategies that you can use. Okay. If you're bearish, meaning you're expecting the price to go down, there are 14 different strategies that you can use. Okay. There is another scenario where the price neither goes up, neither goes down. Neither goes up nor goes down. Okay. The price just goes sideways. There are 25 strategies for those. I don't know why there's less number of bearish. Maybe I guess the price normally just goes sideways to bullish, I guess, right? And that's normally the case. You'll find most of the time the price actually goes sideways to bullish. Okay, there are a few times where the price actually dips, but that dip is going to be very short. Okay, so when the price dips, when the price goes down, it normally goes down very quick. Okay, so normally the price, right, it'll go up, go sideways, right, goes up, and a sharp drop, and sideways, slowly up, right, and then sharp drop, and sideways. So normally that's how it goes. And so that's the reason why we have 21 strategies for bullish and 25 strategies when the price going sideways, and only 14 strategies when the price going down. Because price normally goes very sharp down, then it recovers, goes sideways as it makes base. We normally also call that a base. So when it goes sideways right here, it's building a base. Okay, it's also called consolidation, sideways. Okay, there's a few names for that. The movement of the price going up is normally slow. Okay, and you will notice that when it's going up, it's very slow. Okay, we just looked at that NVIDIA chart, where it gave us a really good money in 3 months' time. But remember, it's 3 months still, because we looked at it into a replay mode, so it looked very fast to us. But if you were in a live, if you had that position holding, actually in a live, right? You have to wait 3 months. So that movement to the up is very slow. But the movement to the down is very quick. This can take maybe a day, or 2 days, 5 days maybe, for this sharp drop. And it can take about like 3 months to go back up. Okay. And because of this concept, or because of this scenario here, is where the option theta we have learned about time decay comes into play. Okay. What happens, let's say you, so okay, let's going back to the, if you're bullish, what do? You buy a call. And if you're bearish, you buy a put. Okay. That's my simple strategy. Why? Also, why I don't focus on these 60 different strategies? It takes my time. You know, it's gonna take your time, right? But even that's not the problem. Okay. Me learning just this one thing, I know what I'm gonna do when I'm bullish. I'm just only gonna buy a call. Let's say you learn all these 21 different strategies and you're bullish. Now you're like, okay, should I take the first strategy? Should I take the fifth one? The ninth one, maybe it looks good. What about the number 13 strategy? But I think I'll go with 19th strategy. By the time the setup is already gone, so then all you will be left with is nothing. Huh? For me, it's very simple. I see, okay, the price is heading up. I'm simple by gonna call. I'm done. Okay. But here's the thing that I had added: risk management. Okay. This is a very, very important, because what I said in the last session, always expect your setup to fail. Always. So the only thing that can save you is the risk management. What is this risk management? I think I have a slide for that also. I have shared that also. We'll go over that. Okay. So it's gonna take all this time for me to learn all this 60 strategy. But what is it important? I think this is where people don't really understand what's the important thing to be doing. If I am bullish, if I am bullish, then I will do one of these 21 strategies. But how do you know you're bullish? What makes you think that you're bullish? What are the points you're looking to come up with that conclusion that you're bullish? Okay, identifying the direction. This is the most important piece. So look, all of these 21 different strategies, they're basing on you being bullish. But what if you're wrong? It doesn't matter which strategy you apply. Okay. You may know all these 14 different strategies for price, for you to be bearish. You're thinking the price is gonna go down. But what if you get that wrong? Okay. So identifying the direction, where is the price heading, is most important. Once you can figure this out, then go with the simplest strategy. I mean, if you can really get good at identifying the direction, why do you even need to learn all these different strategies? Just buy a simple call. You're done. Okay. But sure, I mean, let's say you make, just by doing this, you make a lot of money, and now you have a lot of time in your hands, and you're like, okay, you know what? I have nothing else to do. I'm just gonna read some book and I'm gonna learn all the strategies. Sure, go for it. Okay. All right. So that's enough said about that. Let me change the slide. Okay, so now this is the other slide that I had mentioned where I had said um, so there are three things: options, stocks, and futures. Okay. And I had said that the options and futures, they are contracts. They are derivative. What is derivative? Meaning that has some other source. Okay. It's basing on something else. Okay. So option is a contract that runs on a stock. Futures is a contract that runs on major indices, not a stock, not an individual stock. Okay. So here's a little chart for options. Let's say you want to trade a contract or you want to trade an option contract on Apple, you will pull up Apple chart. You want to trade an option contract for Tesla, you will open up a Tesla chart. Okay. Now, you want to trade a futures contract, you will open the major indices chart that is for futures. Okay, and I have listed some of them here. So SPX is a major index. It's a major index. So for you to trade futures contract, you will open up ES chart, which is the futures chart for SPX. Okay. NDX is the NASDAQ index. The future ticker symbol for you to open that chart is NQ. There are other things that you can trade under futures. You can trade oil. You can trade gold. You can even trade other currencies. I didn't list that there. You can trade a euro. You can trade Japanese currencies called, I believe, called a yen. Okay, so you can trade any of those currencies under futures. Okay, and we just looked at, okay, if you are a bullish for options, meaning the price is in the uptrend, you will buy a simple call. If you're a bearish, the price is in a downtrend, you will buy a put. If you flip this to the future side, if you're bullish, you will take a long contract. Okay, just going over how they call it outside in the trading world, so you can get familiar with it. If you're bullish, if you're thinking in the futures ticker symbol, when you're trading futures, you're expecting the price to go up, you will buy a long contract. If you're thinking the price is going to go down, you will open a short contract, which is same as selling. You're selling contract. Okay, a long is a buying contract. Okay, so that's the difference between options, futures,
and stocks. Stocks is a investment. Okay, is an investment. You're actually, when we say investing, you can only do that with the stocks. Why? Because you can hold that for long term. Okay. Options, contracts, they're for short term. Futures, contracts, they're for short term. Both the options contract, you don't invest, you trade them. Futures contracts, you don't invest, you trade those. Okay. So investing versus trading. Trading is a short term, investing is a long term. Okay. So far, so good. Do you have any questions? All right. So people who's already trading options, what is the issues that you're having? What can I share that can help you in your trading? Are you understanding what is a call? What is a put? Do you want to learn the buying side of the option? Do you want to learn the selling side of the options? Maybe talk about what has, if you had losses, why did you have those losses, and then maybe we can come up with a way for you to recover your money or do better in your trading. But this is yeah, go ahead.
Yeah, just was wondering, how do we pick how do we get into a particular stock option based on the technical analysis you did on the beginner's one? So when do we pick actually? So I know it is different between investing and then playing with the options. So that's where I'm a bit struggling how to get into the right entry of the right stock. So if you can just elaborate on that, that would be great.
Okay, so yeah, so pretty much you want to know, well, which option to go with, right?
Right. Right.
Yeah, okay. Yeah, so there is a difference. I think, let me see, did I ever cover I wish that Manjeet was here too. Okay, so there are two things. Let me open a new one. All right. So let's say when we are doing an option trading. Okay. One is option flows. Two is the technical analysis, like you said. Third thing is risk management. Okay. What you're asking me is on the number one, the option flows. Okay. Now, I have seen, so I've been, trading options for a while. What I have seen is that the way I look at option flows, I'll share that. Remember what I said, always expect your setup to fail. You can always expect your option flows. It doesn't matter what best method you can come up with. always, you still need to, because see, the market can work against you, and it always is. Okay. Even with the options flows. Okay. The data that you are looking, that's a retail, that's a data for retailers. Okay. You only have access to what the other retail traders are doing. Okay. And some of the things that you can look at is volume, open interest, maybe delta. And I'm simply talking about the buying option, okay? Buying calls or buying puts.
Right.
So
Yeah.
delta. Volume, OI, delta. Maybe you can look at the total premium. Okay. Most of the time, these are the only pieces of information that you have. Okay. And these pieces of information is most likely coming from the retailer end.
Okay.
Now there is another party that's always working against you. Called money makers. Okay. Now, who are these money makers? Hedge funds. Right? Other broker dealers, banks, big banks. Okay. So, now the wealthy people, right? So retailers. So why am I telling you this? Because there's something called buying power.
Mm-hmm.
All right. The wealthy clients, they don't trade in the stock market like we do. Okay. They're not the retailers. They simply wealthy people, millionaires, billionaires, multimillionaires, soon to be trillionaires. Okay. They normally go to banks, hedge funds, brokers, and they have a lot of buying power. Us retailers combined can't even come closer to their buying power. Okay. So us retailers are always on the downside. We're always we can try, but we always you know we always have an expectation of failing. It is for a reason, because we don't hold majority of the buying power. We don't. Okay. This buying power is being held by the wealthy people, and they normally go to hedge funds, the brokers, the banks, all right, and they trade on their behalf. They will act according to what they're saying, what they want to do. Okay. Because of that, there's a lot of manipulation going on. Lot of manipulation. Okay. So us retailers, we only have access to what the other retailers are doing. And now the problem is the buying power from these wealthy people
can override all of this data at any point. Okay. So that creates a whole lot of issue for retailers. So now what do we do? Okay. So that's why we kind of need to learn technical analysis, because when these money makers make a move, right? Because they're simply following the commands of these wealthy people, they're gonna act because of that. Okay. When they make a move, they will leave a footprint on the charts. So then you have to get better at reading those footprints. Okay. This is probably where you will heard follow the flow. Follow the flow. And what flow is this? This is the flow of where these money makers moving, where these wealthy people moving. Okay. If you go against this flow, you will be crushed. Okay. So like I said, us retailers only have very limited access to data. We can't even look at, what kind of orders these wealthy people are placing, what they want to do and stuff like that. But now there are few companies that's coming closer to that. I use Traditix. In Traditix, there is something called, you probably have, mentioning in the charts, Whales targets. Okay. They have, so these company, Traditix, I think even like Unusual Whales, they have figured out a way to read these footprints, these big orders, big order flows that's being placed, and combining other data points, they can say, okay, this is where the whales. So whales are called, to these wealthy people. Okay, that this is the level that they are targeting. So they have come up with this, they have access to some more data, or they're looking at other things, and they have come up with a way to say, okay, this is where the whales are targeting, and that's how they generate these whales target. Okay. So that's one way to kind of see, okay, as a technical, on the technical piece, technical analysis side, where things can move to. I have seen a very high accuracy, using whales targets. I've been using it since last year now.
Okay.
Yeah. But sometimes the whale targets do change. Okay, they do change. What I'm thinking is, what happens is sometimes, just like us, these wealthy people can say, oh yeah, I'm gonna, buy these stock, and they give a order, right? So then it generates that for initial whales target, right?
Mhm.
Then they may change their mind, like, no, I'm not gonna do it, right? I'm gonna invest in some other stock. What happens is that initial whales target in that stock will go away. And I have seen this scenario before.
Okay.
Okay, right. So, but still, looking at, if you can find a whales target on a stock, that is still a good target to reach at, rather than just going without it. Okay. And
Right.
that kind of leads to the third point, the risk management. Now, let's say what I just covered, right? You looked at this some chart, some stock, and it had a whales target.
Right.
Okay. So, okay, what are we working on here now? We are working on our probability. We are working on our chances, winning chances here. Okay. So first thing,
Right.
we looked at the options flow. We looked at all of this data points, right? We looked at all of these data points.
Mm-hmm.
Okay. So now we got little bit of percentage on in our favor that okay, we have looked at all of this. So we gain maybe like 20 to 25% chance in our favor.
Mm.
Okay. Then we look at the technical analysis. We look at the chart. We look at the Wales target. Do we have a Wales target for this? If we do, great. That's gonna bump our chances now. Let's say now we are above 50%. Let's say 52%.
Okay.
Okay. So right there, just combining the options flow, looking at the technical analysis, looking at the Wales target, we're just bumping our winning percentage. Okay.
Right.
But then one thing I said, always expect your trade to fail.
Set up to fail.
So that's where we come up with the risk management.
Mm.
Okay. If we are not careful in how much we are paying for this option price, I don't care if you're at a 52%, that can go down to zero very quickly.
Right.
Okay. So you could be at the more than 50% chance and everything expecting to go in your favor, but you know what? You failed to apply a proper risk management, and you didn't listen to me when I said always expect your trades to fail. And you guess what? Now you went with a bigger sizing, and now you're just gonna blow all that up. Because like I also said, the Wales target can go away. So what if the
Right.
Wales target go away tomorrow, and you fail to apply a proper risk management,
Mm-hmm.
right? Now you're done.
Yeah.
And that actually
Because
happened, with somebody. He's in the group. So we actually had we were looking at ServiceNow.
uh,
ServiceNow was showing a Wales target at about 1100 or something. So he actually he opened the shares. So good thing he only went with shares. I think he
mm,
he was even asking last week or something. How is this looking right now? And I had reviewed the chart of that, but the reason he had gotten into the service now because at one point, and I'm talking about maybe 3 months back, 3 months, yeah, easily 3 months back, it was showing a Wales target at 1200 something, and that Wales target went away.
uh,
And that Wales target went away, and it has never gone to 1200. But because luckily he bought the shares. If he had gone with option, he would have been done, right? Because I mean, there's
right. Yeah.
a time decay and all that. But he went with the shares, and we looked at the chart, and I saw that it was at a support point. So I told him, hey, add some more to your position, and he did,
Mm,
which lowered his the average
cost.
cost. Yeah. And I think, yeah, the chart is looking good for a little bit of bounce back up. Yeah, as soon as he gets into break even, yeah, he should, I think he's going to close that out.
Right.
So that's exactly what I said. You can see all of those things. You can look at the option flows. Everything looks good. You can look at the chart, the technical analysis. You can look at the Wales target. It's there, and you're like, okay, I'm gonna take a trade, but you fail to, a proper apply proper risk management. Yeah, you're done with your account.
Right. Yeah.
So those are the
Thank you.
things.
Yeah.
Yeah. So for option trading, we really have to follow risk management. Because the time is always against us,
Right.
uh, and it's gonna kill the value of the option. So I think in the option trading, the one thing that you should be focusing on is simply this. Okay.
Okay.
Yeah. And I'm telling you, so last year, the whole entire year, my return was over 100%, simply trading options. And I
Mm-hmm.
can I think I have sent screenshots of that. If you want to see, I can send it to you.
So my average, for the entire year last year, my return was over 100%, which, by the way, is not easily reachable. No hedge funds is able to go even above 50% for the entire year. Okay.
Right.
And how I was able to do that? Simply point number 3.
Risk management. Okay, got it.
Okay. Simply point number 3.
Okay,
And
so
I'm telling you, this year, okay. So okay, let's say last year, the whole year, I was just lucky.
mhm,
Some people may say, "Oh yeah, I got lucky." For the whole entire year, over 100%, people will say that I got lucky, right? Okay, check this out. Year to date, this year, I'm almost reaching close to 200%.
oh, that's great.
Okay, and again, I did not change a thing. What I did last year, I'm simply following that this year also.
Right. I also heard of that. Yeah, if you see some consistency, if you are winning particular pattern strategy, so continue that. Yes.
Exactly. Okay.
Good.
So yes,
So
risk management, I will say, is the number one thing if you want to get consistent at winning. You got to apply the risk management. I don't care what other people, where you have read and heard other things to do, but a lot of people gonna fail simply because they don't apply proper risk management.
right.
Okay.
So if I want to, there is one other thing, maybe you can help me. So for example, if we are buying options, okay, so we looked at the trade, I mean the setup and option flow, and we want to take a weekly option, then I know there is bit of time, not a whole lot of time, but if the price goes down, the premium goes up, also goes drastically below. And then, so do we wait for another day to come back up, or we cut our loss on that day? So how do we play this thing? If you have any tips that you could give us.
Yeah, I'm gonna put that on the board.
Okay.
Okay, so a lot of people, they're gonna make mistakes, and which is normal. We all learn by making mistakes, right? So,
We're making mistake, right?
well, so we have to make mistakes, right? So
We
here
have
you
to learn, particularly in this one, actually, trading.
go. All right. All right. So you start taking profits at these percentages: 25,
Mhm.
50, and 100.
Okay.
You exit out at 30%,
Okay.
minus 30%.
So strictly, if it goes below in a day, then just get out and then don't worry about whether it comes back up next day.
Exactly.
Okay.
Okay. Now I will tell you why this is. Okay. But see, this is gonna fail if you don't do something before.
Mm-hmm.
Okay. What you need to do is, again, follow risk management. Okay. So the risk management. So the risk management you have to apply when you're taking the trade, right?
Right.
What this is, profit taking exit, this is how you manage your trade.
Mm-hmm. Yes, managing the trades.
Yeah, manage
The
your trade.
execution part.
Yes. Okay. But the risk management starts when you're taking positions. Okay.
Mm-hmm.
So this is my way. Never have more than 10% of your account size. So account. So 10% of your account on a single trade.
Okay.
Single trade.
Okay. So on a single trade, you're only allowed 10% of your account.
Okay.
Okay. And then this is I think I do have a slide for it somewhere, but okay. Okay, so this is on a single trade. This is for this yes, this is for a trading. This is for a trade. But then you also need to apply a risk management on your overall account.
Mm-hmm. Okay.
Okay, so the overall account, only you can decide how aggressive you want to go. Okay, how you want to how much aggressive or not aggressive you want to go. Okay, so the more aggressive you want to go, okay, so of course you're gonna apply, let's say, like 80% of your account.
Mm-hmm.
Okay, and if you want to go less aggressive, then let's say 40%. Okay, so here's the thing now. Let's say you want to go really aggressive, and I said 10% on a single trade, meaning you can take 8 trades.
8 trades. Right.
Okay. Or if you want to go less aggressive, and I said 10% on a
trades.
single trade, only 4 trades.
4 trades. Okay.
And you decide how much this is, basing on how you feel. You also need to base this off of the market condition.
Right.
Like right now, market is right now market just hit all-time high. It is
Yeah.
still pretty, we're not sure what's going to happen. There's a Fed announcement coming next week, right? So normally looking at all those scenarios, you can go back and forth between this. Okay, so you can say, okay, well, yeah, I'm not really sure about how the market is going to go. What you will do, you will reduce the overall exposure in your account for these trades.
Right.
Okay, when you see, okay, let's say the market, next week they cut the interest rate, you wait maybe like a week or two to see how the market is reacting to that news. And if the market is really, going higher, then you can say, okay, I'm going to take some more exposure. Okay, so then you can go from 40 to maybe like 50% to maybe 60%. Okay, so you can base this off of how the market is doing also.
Right,
But
right. It makes sense. Yes. Yeah. Thank you.
Okay. Yeah, but the trade only 10% of your account. Okay.
Okay.
So if your account size let's say is 5K. Okay. So on every single trade, no more than $500. Sorry, is it 10%? Yeah. Okay.
Yeah.
$500.
Okay.
Okay. And so on. If it's your account is 10K, then you can go 1,000.
1,000. Got it.
Okay. And then once you're in a trade, then follow this.
Okay.
Okay. Yeah. So yeah, exit always minus 30%, profit taken 25, 50, and 100. Now let's just focus on this here.
Okay.
Okay. So your initial profit taken is at 25%. Okay. So let's say you take let's say your account size is 10K.
Okay.
Let's just play this. All right, let's take 5 trades. So we do 1,000. So in each trade, we're allocating about 1,000.
Okay.
All right. Okay, let's say we get 25% here. So what's 25% of 1,000?
250. No.
Yeah, 250, right?
Yeah, 250. Sorry.
All right, you made $250. You collect that.
Right.
All right, here Yeah, let's say you got a loss of 30%. So you
300
lost 300.
minus 300.
All right. Third trade, let's say you still got 30% again, so minus 300.
300.
Okay. So you're in negative. But the next
Right.
two trades, let's say one of them gives you a 50%. So you
Okay.
make $500. And on the
Okay.
fifth trade, let's say you make 100%.
Mm-hmm. So overall positive, yeah.
Yeah. So 1500, 1750, and 600, you're net 11, right? 15, 17, yeah,
Yeah, 150.
1150. So this is the way it's supposed to work.
Okay. All right. Thank you very much for putting this together. Really helped me so to think,
Yeah.
and then so I need to work on the execution of this plan actually. Thank you.
Exactly. Yeah. And yeah, I mean, if you, so depending on, so I mean, you can take the trade alerts, that we mentioned in the chat, follow
Mhm.
the same kind of, the management plan here. Or
Right.
you can look up your own, option flows, but still follow the same,
Plan.
same plan here.
Okay, thank you. Right now, like I mentioned, so I'm not doing any real trading. I'm working on paper trading to
Okay.
get more confidence levels.
Yeah.
So once I'm through that, beat that fear of trading, then probably I'll slowly work on it. Thank you.
Yeah. So what you just said that, I'm building on my confidence,
Mhm.
so what I will tell you, sure, go for a paper trading, but what I have learned with the paper trading, it doesn't really do a whole much of that. You
Right.
got to see. So think of this way. You want to do good. You want to win a trophy in swimming.
Right.
Let's say you want to win a championship. You want to win a gold medal in swimming. But then you go, you know what? I'm kind of not very confident, so let me practice swimming in the sand.
Yeah, I know what you're saying. Yes, yeah, I agree, totally agree. But I wanted to see how, I mean, I'm trying to focus my mindset on, okay, as if I'm working on real time, real
Yeah.
money. I'm
Yeah.
trying to work on that. So, but
So there is a better way.
applying this thing. Yeah.
Yeah, there's a better way.
Yeah.
I don't know if whatever account size you have, just allocate $1,000.
Okay.
So remember what I said, account size here.
Yes.
Okay. So what you can do, okay, you can decide, okay, I'm only gonna trade. So I mean, I don't know what account size you have. You may have like 10,000, 20,000, 5,000, right? You can say, okay,
Mhm.
I'm only gonna trade with a $1,000.
Okay.
Then you're gonna take trades with 10% of that. So meaning you're only gonna spend $100.
Okay.
Okay, let's say there's an option flow that's $2. Would you take this trade?
Mhm.
Would you
No,
take this? No.
because it's beyond my
Exactly.
trade rule.
Yes. Let's say there is a option flow for $10. Would you take this trade?
Maybe, maybe not
Maybe.
actually.
Right.
So if
Exactly.
I
It's
want
close
to
to $100.
strictly, yeah,
Yes. Okay. So, but what I'm saying is, just trade. Think that you have only $1,000 account, and you only gonna
mm,
take trades that falls close to 10% of
that
that
thousand
$1,000.
limit,
So
yes.
only take trades which is $100 in cost.
Okay,
Okay,
got it.
until you build your confidence, higher. Okay, where you see, okay, and then follow the same thing here.
Yes.
So you take these $100 trades. Okay, you get out at minus 30. But if you are
Mhm.
having a if you're getting gains at 25%, you collect that. Okay,
Right. Right.
take 10 of those and see what is the
Mm.
result.
Okay.
Okay, and see if you end up at a net positive,
Mm.
okay, meaning you can increase your size.
Right.
Okay, so take 10 trades. If the net result is positive, then what you do, you increase this 10% slightly. You can maybe go 10 to maybe like 15%.
15%. Right. Yeah.
Okay, so now you can
Got it.
take dollar
Well,
anything that goes like $1.50.
right.
Okay,
Mm.
so yeah, do it this way. This is a very good practice, better than paper trading.
Right.
When you see the real live things, and you can see that it's coming out your way, then you will get much better confidence this way.
Much better confidence. Yeah, I totally agree. Thank you. Thank you. Thank you for
Sure.
the session. Yes, I will look into it and then slowly work on it.
Yeah, definitely. Okay. All right. I'm gonna take a 5-minute break, and then we'll start a weekly review session.
All right. Be right back.
All right, we'll go ahead and start with our weekly review session. Okay. So I have said this before in previous sessions. It's only my opinion, what I'm about to share about the market. If you have any other better way of looking at the market, do pitch in. Maybe you know something that I don't. So this way I will also get to learn something new. It is an open forum. We all, discuss things as a team, all trying to make money here, right? I will share what I have come across, the things, how I look at the market. And those things may not turn out to be that way. Okay. And that's how it goes with the market. Don't start fighting with me. Right. We're just looking at ways, what happened last week, and just kind of coming up with our own opinion how the market can move next week to next few weeks. And I can be wrong in analyzing that. Market can always take a turn. Okay. If you were there in the last session, I was saying that there are forces that's always working against us. So always keep that in mind. But when we look at the SPY chart, so we look at SPY chart when we are reviewing markets. Why? Because SPY has the top most, big companies in the United States, top 500 companies, right? So that's the reason why we look at the SPY chart as the overall market. Okay. When we ask question, well, how did the market do last week? How did the market do last month? We always normally just do the SPY chart. Okay. So what we see here is a clear uptrend. Okay, so we have I learned how to identify uptrends in my learning sessions, and we can clearly see SPY has been in an uptrend since April. Right, goes up slightly sideways, then goes up, or 1 week down, right, and then up. Okay, so this is a clear uptrend where it's making higher highs, higher lows. Okay, so there's a clear uptrend. What else happened last week is last week actually closed above the prior week high, right there. Okay, we call that a weekly breakout. Okay, did it make a new all-time high? Yes, it did. Okay, so it had made a new all-time high the week prior that, the week prior that, the week prior that, the week prior that. The most recent resistance was right about here. Okay, where this week, July 28th, the week of July 28th, it had gone down, creating a resistance. It quickly bounced back and kept on going higher. So now the low of this bearish week creates a support. Okay, right about there. Or what I like to use is the zones. Okay, so from this low to all of this lows. Okay, that is now a support zone, and that sits at 619.50. to 615. Put that 20. Okay, so that is the support zone now. What that means is that it's bullish. The market is bullish as long as it stays above that. Can it come to retest this? Yes, it can. Okay, it can come to retest this. Yeah. And do a bounce, make a double bottom, go higher, and continue its uptrend. Can it do this? It can definitely does that. Okay. There is another pretty good support zone right here. So this, we were also talking about how we had talked about in the advanced session today about footprints. So this footprint is where is mark of when the hedge funds, the banks, institutions, they buy things, right? They leave footprints behind. We had talked about the buying power. Retailers don't have this kind of buying power. So when you see this bullish candle, right? This is an engulfing pattern. And why does this engulfing pattern happen? Because this is where the institutions, the hedge funds, the banks came in. Okay. So this is also called a momentum candle. Retailers simply don't have this kind of buying power. So this is a footprint here. Okay. So we do have a support zone here. We also have a demand zone. So what is a demand zone now? Demand zone is exactly what I just said, is where the institutions came. And these are the footprints for that. This is a demand zone. Okay. So now going back to this the direction, what he could also do, come back to touch this demand zone. Do something like this. Okay, so it can definitely come to retest this demand zone. Okay, but it is in a bullish trend. It is in an uptrend. Nothing seems to be broken. We can expect the market to continue this direction. However, it may continue. It may come to retest the broken levels. And what are those broken levels? Right here. This is a resistance. There was a resistance here which got broken with this momentum candle. So we can retest that. Okay. There is a support zone above that, so you can retest that. Okay. You can also retest this demand zone here. Never chase things. Never chase things. Okay. Especially when it's hitting all-time high. So would you take a long if you are not already? No, you will not take a long here. If you don't take a long and after the Fed announces interest rate cut, can it fly off and you can miss out? Yes. And it is okay. But remember, it will come to retest the broken level. If not now, later it will. So you wait for that. There was a resistance right there, right over here. And look what it did. It retested that level. There was a resistance made with this bearish candle. It broke. And then look, there was a retest with this wick. Comes back again. There was a wick developed here before going higher. This is exactly what I was saying. Once a level is broken, it will retest that. And that is the point of entry for you. Okay. I also showed how you can use Stosh. So we're looking at a weekly Stosh right now, and look how overbought it is at this point. Okay. It has to come down under sometime. Okay. I mean, the Stosh can stay overbought for a very, very long time, and we can look at in the past. Okay. Look at that, right about here. So this was November of last year. Oh, sorry, 2023. I'm on a weekly chart. It had hit 20. From there, it kept on going up. Okay, and then it goes to 80. Okay, and it stayed overbought for a long time. It got to 80 November 20th. November 20th, all the way here, right here, March of 2024, stayed overbought. Then it had a dip a little bit. Okay, and this was where you could have taken an entry. Okay, normally the major index, you will not see, you know, going to 80 and then right away to 20, go to 80, come to 20. It will not have this kind of move very often. Okay, so look, okay, we just compared these 2 points when it hit the 20. So the last time, so here it was October 23rd, 2023, when it hit 20. The next time it came to 20 was in April 7th, 2025. And both times, if you were looking at these points, you could have generated so much money. Let's look at that. Okay. So 2023, all this move up. Okay. 2025, all this move up. So for the long-term investors, I just showed you something. I just showed you that the market can stay in an uptrend for a very long time. You add to your positions when you do see Stosh coming to 20. Yeah, so let's say you had opened your initial position here, in October 2023. You will hold on to that position. You never let it go, right? Then you will add here. Second entry here. Here and here. Market will always make new highs. Look at that's Stosh. So the bottom indicator, this is Stosh. Okay. We can look at how many times Stosh hit 20. And if you had added, let's go back to the COVID. Okay. So let's say you had started trading in at that time. So you saw Stosh at 20. In fact, I did take a trade. No, sorry, that wasn't COVID. I took a trade on this drop here, right here. October 2022 is when I had taken the trade. At that time, I actually wasn't I wasn't even looking at Stosh. But let's just say you had added or open at the COVID when you saw the Stosh 20. So you would add right about here. 1. Okay. Then whenever it hits, whenever it comes to 20, Stosh comes to 20, you will add. Okay. So right here. This is May 2022. Let's just add here. I'm talking about simply shares, not options or anything. Long-term investing, right? Okay, so May comes back in October, so you add some more here. Okay, so you just close your eyes, you look at Stosh 20. Okay, I'm just gonna go in. Okay, so your initial point was 2020. Then in May 2022. Then in October 2022. Okay. Then in same October 2023. Okay. And then right here in April of this year. See how you're always adding higher. You're not adding when it's going below. How many shares would you have accumulated by now? And getting dividends also. So in just like over 5 years, you would have had nice portfolio. Okay, so go ahead. Okay, I forgot this was a weekly market review, not a technical analysis. But yeah, this is how you can use Stosh. It's not broken yet. Market is in a nice uptrend. Fed is announcing interest rate drops next week. Look out for that. I'm gonna go. What other things do I cover normally in these sessions? Let's see. I look at normally the unusual whales. What do I show in the unusual whale? Let's see. We can look at sector flow. Let's see which sectors is doing good. All right. So this is unusual whales. What do we see? Oh, people staying very defensive still. Look at only the utilities went up. Consume. No, is it? Let me refresh this. Sometimes it's not refreshed. Okay, it is refreshed. Okay. Communication services, consumer discretionary, but technology down, financials down, real estate down. I think this is only 1 day, 30 day. What is this? I think it's only 1 day thing. 1 day doesn't really tell me the overall trend. That's why I don't really. Okay, here. This is something that's a little bit better. 1 month trend, right? So what do we have here? XLK. What is XLK? XLK is okay. So technology is on the top. So okay. So yeah, this fails. This is not right. We want to look at the a little longer view than a day to really see the trend. Where is my real estate? So let me take off all of these here. We're just gonna leave us by. All right, real estate. Where is it? Okay, so this is pretty interesting here. We know that interest rate is expected to go down. Okay, SPY is at a all-time high. Okay, for last month it has gained about almost 4%. Real estate has gone down by 1%. Where do you think is the opportunity lies? And I've been talking about real estate, since when? Since July. I've been talking about it since July. So let's look at last 3 months. There you go. So 3 months, real estate has actually gained almost 7%. Yeah, REITs, exactly. Okay. I started talking about real estate REITs in July. Okay. So in last 3 months, it has gained about 7%, almost 7%. Let's see. Technology is always the leader, but it only gained 4%. Sorry, my bad. 6.45%. So real estate and technology. 3 months, sorry. Okay, so 3 months. Okay, sorry. So I was in a. So technology actually has gained 30%. Right? Why? Because we know technology is the leader. That's what moves the market. If technology is not doing good, you cannot expect the market to do good. Okay. Take off the technology, go back to 3 months, and let's see what else has moved in the last 3 months. Where is our healthcare? So last 3 months, healthcare is dropped negative 1.23%. So now let me ask you the question. Where do you think the opportunity lies?
How about energy?
Yeah, let's take a look at energy. Energy in the last 3 months has gained almost 13%.
Oh,
Yeah. So the only lagger is the healthcare, and that's where the opportunity lies, right?
because it went down, right?
Even financials, banks are, I don't know, let's see, take a look at the financials. Yeah, financials gained also last 3 months. They gained about 12%.
Mm.
But yeah, we talking about where the opportunity lies. So we want to look at the sectors that's still lagging, and yeah, healthcare is lagging. What else? How did the utilities do? Yeah, utilities, you won't see that much movement. They're the stable sector of all. Normally, people buy utilities shares to accumulate dividends. You can even see very sideways movement. But in the last 3 months, they have gained about 8%. They are the defensive sector. Let's take a look at materials. We have heard a lot of hype about materials, and look at that. almost. I mean, have you ever seen materials doing as close to as SPY? So materials doing 14%, SPY did 17%. So materials, with all that tariff and uh, a lot of materials gets used in the defensive sector, to build planes, the jets, rockets, all of those use materials. And there was a major push to increase the rockets, the ammunitions, you know. Uh, so you can see that all of that demand, what it did to the material sector. Normally, material sector doesn't do this kind of moves. They're also the stable ones.
Question.
Yeah.
For the healthcare, with the budget cuts and stuff going through for the insurance, do you reckon they already taking that into account and that's why there's a dip, or that has nothing to do with it? I mean, difficult.
So, when even before election, when Trump was just won the election last year, there was a talk that is gonna impact the healthcare. So it was already coming out. The news was coming out that the healthcare was gonna be impacted, because Trump has always been against this Obamacare. He always wanted to kill this. He doesn't even like Obama. He just wants to get rid of this name from the planet, Obama, right? So anything where that has a name associated with Obama, he wants to get rid of all of that, right? So that was the reason why when he won the election, it was kind of known at that point that he was going to do something to the healthcare, and he did. Yeah, he got rid of all the funding. So I think all of that dip is now done. So we go year to date on healthcare. Yeah, so all of this dip here, I think it has bottomed out. The healthcare has now bottomed out. It went down to like what, 15% in April. Sorry, that was SPY. Where is healthcare? Right here. Yeah, so 6%. And now we can see that it's going up. And especially, I think what happened now, Buffett investing in United Health Group. So I think people are now saying, if he sees something positive, it means it is good. So that's why we see we will take a review on the chart. But yeah, United Health Group is doing really good now.
A lot of pharma stocks are also very undervalued, Sundarbaji. I think
Which one?
several pharma stocks also. So I have a position in Pfizer. Maybe if you can take a look at the chart.
Let's go to the charts.
Novo Nordisk is another which is also dumping quite a lot in last few months. So maybe since we are looking into healthcare, maybe let's just take a look at the few top players in this.
Yeah, okay. Let's take a look. Let me open up my. You said farmers stock, right?
Pharma, Pfizer.
Oh,
Like
pharmaceuticals.
drug makers.
Okay.
Yeah.
Acha. Okay. All right. Let me share my other application that I like to use for these sectors and all that. Okay, so this application I really like. It breaks down, the whole stock market into sectors, industries, and all that, and I can do I can chart those with the fundamentals. This is the graphs that I normally paste with the fundamentals, growth, EPS, and sales growth. So let's go into let's go first in the sector. I actually have a query also that I run for industries. Where is it? ETF industry. I need to reset this. Hold on. It times out on me.
Fuzzy, are you talking? Can anyone hear him? Or is it just me? Okay.
We can't hear.
Yeah, he's not muted, but still we can't hear him. No, we still can't hear Vivek.